Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005 and still alive in 2026. My, what a nice day today. Friday, OPEX over. Yay. Confetti, balloons, explosions. Big green day on February the 20th of 2026. The market's up 0.72%. Still choppy, right? Of course, the big news of the day, out of nowhere, SCOTUS kills the Trump tariffs. Okay, Trump is fuming mad. The Supreme Court 6-3 decision that tariffs should be the purview of Congress and cannot be entered into unilaterally by the president. We'll get to that shortly. Let's talk about the technical picture here. Of course, we are just looking at support and resistance levels here. We are in a choppy environment. No pun intended with ChopX. I mean, we are just up and down, up and down, up and down, caught within this range. Basically the same level since October 2025 with a lot of volatility, okay? Today's up day was because of the tariffs, but basically we finished exactly where we should when it comes to OPEX between 685 and 690, killing all the premium of all the calls that were bought here and all the puts that were bought here. Congratulations, market makers. Great job. Okay, so the technical picture here. Let's go back to the technical picture. It's neutral. Okay, let's bring in the moving averages. Okay, we closed above the 50. Okay, but we said before, because of the nature of this market, up, down, up, down, up, down, it violates the 50, comes back, closes above the 50, goes down below the 50, closes above the 50. Okay, so normally, if we were in a normal upward trending market and bullish, we would say that this was a bullish technical pattern because we finished above the 50. A lot of funds will come in, yada, yada, yada. However, because of the fact that we are in such a choppy market, I will reserve my bullishness or the bullish technical analysis conclusion until we close above the highs here, okay? So technically speaking, I'm still in neutral mode, okay? Even though it still looks okay, we're still in a choppy sideways pattern. We don't know how it regulates, okay? So let's go to our sentiment analysis. We always pair it with a sentiment. Fear, because we were at mid-fear here, like around the 38 level, because of the up market today during OPEX, the last day, we finished still at fear. I would say between fear and neutral, okay? The sub-indices, pretty much the same. Strength and breadth of this market are pretty good. This is the underlying positivity of the market, okay? Stock price strength measured as new 52-week highs, okay, and lows on the New York Stock Exchange. So the price strength is always good, and the breadth is increasing. More sectors are participating, not just the Mag 7, okay? So yet we still have the contrarian view of a lot of puts being bought, market volatility is still relatively high, although it dropped today after the big day, and everything else, okay? So overall, we are neutral to fearful, okay? Plenty of room to go higher, So that's it for the sentiment. You guys know that even though we are neutral here in terms of the technicals, the sentiment is setting up for a very bullish move, okay? So let's go to a couple of macro prints. We had today was, SCOTUS overruled, took the sunshine, took the spotlight away from a couple of the macro prints that we had. One of them was the fourth quarter US GDP was just 1.4%. Still up, but it missed estimates. They were expecting here, if you read GDP here, was expected to be 2.5%, but it got 1.4, so we're slowing down. This is good for the rate cut scenario, okay? So you have a positive thing on the rate cuts. However, we don't want to get to the negative territory where we have like 2 quarters of like negative growth, then we're in a recession. Okay, so fourth quarter was up 1.4%. People were expecting more. The summer holidays, the Santa Claus rally, people were expecting more. Very strange. Keep this on the radar. It's under the radar now because of what happened with SCOTUS, but keep it in mind, okay? We want it to be between 2 and 3%. This is below, okay? Just 1 quarter, we'll see. But this is a very interesting macro print. It's obviously a lagging indicator, but just to see how the trend is going, it's not what we expected. Hence, why the market was probably choppy all this time. Okay, one of the reasons why. So we had fourth quarter GDP. We also had PCE inflation, okay? So this is the PCE inflation, the monthly change, and we got 0.4%. Okay, they're expecting 0.3%. This is pretty high. Like if you look at the 10-year average, it's getting higher. Okay, it's not like 2016 to 20. Look how low it's been. 0.4 is pretty high. Okay, and the core PCE was the same thing. Core PCE 0.4. Okay, if we go to the max, that's pretty high, 0.4. Going back to the 2020, 2021, 22 kind of like recession when the market fell 20%, we're getting to those levels. Okay, the Fed will not raise rates. Okay, but so far this is a worrisome print. So this is gonna be not good for interest rate cuts. So we had the GDP, which is good for interest rate cuts because the lower the GDP, the more likely the Fed is to cut. And here PCE is high, so it won't cut. So, neutral on the rate cut expectations going forward. Okay, so those are the two macro prints. Inflation running hot, hotter than expected. It's just one print. Okay, it's just for 1 month's print. It could all the way go back down next month. Okay, and we know that GDP is slowing down. So high inflation was slowed down in GDP, not looking good so far. One data point. Everything else was good. So the GDP before that was on fire. Over like 4%, I think it was. So take it all together. We want GDP to go between 2 and 3% for the whole year. GDP growth. That would be perfect. And we want inflation to stay muted. 0.2% would be great. 0.4 is high. Okay. So that's it for the macro. So let's go to SCOTUS kills the tariffs. Okay. What was the big news? Here, Supreme Court strikes down Trump tariffs, rebuking President's signature economic policy, and yet Trump announces a new 10% global tariff after raging over the Supreme Court. He's throwing a little fit. Trump is not happy. This is a key move for him because he's been having a lot of losses recently. A lot of negative sentiment. It looks like he's going to lose the midterms because of his saber rattling with Iran. People are not happy with the way he's handling the Epstein case. The SCOTUS now shoots down his tariffs. He's not, he's taken a lot of hits this past, I would say, 3-4 months. Okay. So what does this mean? What are the implications for this? Well, first of all, let's look at the FedWatch tool to see what the interest rate cut expectations are. Before we were expecting in April, that the April or June, I can't really remember last time. So in June before, they were going to start a rate cut in April or June. Let's just say if it was June. Okay, and now, no. If we go to June, there's a 47% chance that they stay and a 44%, that's pretty even. But for sure, April off the table, 82% chance of staying pat. Okay, but for the whole year of December, let's say January 2027, okay? So all of 2026, there is a predominantly higher chance, 31% chance, 32, that there are two cuts. So we still maintain the two-cut scenario for 2026. However, the first cut is being pushed back all the way to July. July is where we see the first cut, okay? Not in June. It's like a toss-up in June, but for sure by July. So it moved the first cut by 1 month. So it didn't really have that much of an effect at the SCOTUS ruling, okay? Maybe because we have GDP down, we had the GDP down, we had inflation. So altogether, this barely moved the needle on the two rate cuts for the FedWatch, okay? So we had that. What else would affect the market? For me, this is very bullish for the market because it alleviates inflationary pressures, more costs for firms. So this is a very bullish thing for the market, and it is, how can I put it to you guys this way? Deficits will be much, much higher because Trump was going to use tariffs to lower the deficit, which is not stimulative for the stock market, for assets, although it is good for the economy, but maybe not for like halcyon, super high flying asset prices. So if you don't reduce the deficit, that means you get more money pumped into the system, which will probably exacerbate, increase asset prices. Okay, so this is what we see throughout Europe, and you have bad economy, but their asset prices going up. I mean, look at the FTSE, which is just a little thing on the side, all-time highs. Okay, market going up, even though Europe, the UK is having big problems. Okay, yet the market goes up because of lower rates. So it's just very, very stimulative for asset prices, but not good for inflation and the economy in general, okay? So asset prices should go up. It's very, very stimulative because a bigger budget deficit will make the market go up, Okay, so that's good for us who are basically bullish. But I'm not going to make any commentary on social political, norms and what should be, what ought to be. But just as traders, this is very stimulative for the market going forward. Okay, so we had SCOTUS tariffs. It looks good for us. The implications for that, well, let's look. First, we look at the US 10-year. Barely made a move. Okay, if you want to see, basically everything is at 4%. We saw the rates barely move, so this barely moved as well. So the long rates, the long bond, this benchmark interest rate indicator for the market is the US 10-year yield, the US 10-year bond, and it barely moved. So it fits with the narrative, what we saw with the FedWatch tool, that it's still 2 cuts for 2026, but the first one is being pushed over. So it's not, we should expect to see not a huge move on interest rates. Okay, but what about gold and silver? Gold and silver should have taken a hit. Okay, no, it's up. Why should they have taken a hit? Well, because if you have no tariffs, it removes the uncertainty. The narrative was that gold would go up, is going up because of all the tariffs and people trying to onshore gold, and there's a lot of uncertainty. There could be a tariff war going on, so gold gets bid. But why did gold get bid when the tariffs are off? Strange. Well, if you look intraday, okay, if you look at the 15-minute chart, this is gold in the 15-minute chart, okay? Today is the 20th. This is the beginning here. 9:30. This is the beginning of the day. So the beginning is started, and when SCOTUS came out around 10 o'clock, boom, gold gets dumped. This big candle right here. But then bought. Why, guys? Same thing with silver. Okay, but why is the case? Let's go back to the daily chart. Well, because we have to understand the fundamentals first. The fundamental reason of why gold is going up has nothing to do with the tariffs, or very, very little. Okay, there are other forces going up. Okay, it's basically China buying, Iran war, geopolitics, and mostly the BRICS positioning themselves against Trump. You can really think of it this way, like a SCOTUS ruling against Trump tariffs gives a win to the BRICS. So therefore, the BRICS are the ones who are like pro-gold, buying gold, so therefore gold can go up. There's so many ways to interpret it. However, I was fairly certain that gold would not take a hit. And silver is quite the opposite. Silver, 2, big day today. Okay, I'm still waiting for it to sort of calm down. It might not. We don't know. We're going to ride with what we had. But so far, I'm still looking to enter positions, especially for this, well, not today, but next week. And certainly before the Chinese Lunar New Year is over. Okay? So that's it, guys. This is the big effects of the SCOTUS ruling. Let's reiterate. SCOTUS kills the tariffs. We are neutral when it comes to the technicals. We expect to go bullish when it goes up here because of a sideways pattern. We're not going bullish just because it closed above the 50. We're waiting this time because, the market is still in choppiness mode. We'll see what happens next week. Fear and greed, sentiment is still at fear. We can go much higher. This bolsters our case. Fourth quarter GDP missed. We have to keep an eye on that, okay? Yet, this is very, I would say, pro-rate cut, okay? And the core PCE and the PCE came in hot at 0.4%. We expected 0.3. This is anti-rate cut. So the two probably cancel each other out. And, the big news, SCOTUS kills the tariffs. It had basically nothing on rates. You can see it from the US 10-year, but the FedWatch tool barely moved. Still 2 rate cuts and barely moved on the US 10-year. So a very, very small effect on interest rates. And gold and silver, complete opposite of what you were expected to see when the uncertainty of tariffs are taken off the table. It was bid. It's almost like it's risk off and everybody's buying gold. But it should be risk on. And for the market, the tariffs going out. And silver too. Silver too, same story as gold. Super up, And for the market, I think it's very, very positive. Going forward, you should be long equities, in my opinion. So which we are. We are net long and we are waiting. So that's it. We're looking forward to next week. Guys, if you like what you hear, like and subscribe and leave a comment. I will answer it as soon as I can. And yes, we are looking forward to next week. See what happens. It's going to be very, very exciting. I'm guessing we break the highs. I don't know. We'll see. Later, guys.